Hey everybody, happy Monday. Welcome to Zach's Live Trader. I'm Dave Bartosiak with you as always, ready to kick off another action-packed week here at Zach's with a ton of earnings reports coming up right around the corner. So we're gonna end up doing 4 of these bad boys this week. 3 of them being free for everybody to check out on our Zach's YouTube channel, where I will go through our price consensus EPS surprise chart, the detailed estimates page, and then check out Yahoo Finance to take a look at the options chain, then give you a bullish trade, a bearish trade, and then in my humble bearded opinion, which one of those I believe is going to be the best. However, one of these streams you're not going to be able to see unless you're a member of our Zach's Live Trader service, our Zach's Live Trader YouTube premium service for $9.99 a month. You can get a 14-day trial to that, but there's more. But wait! There's more! You also get the weekly review video where I talk about all of the trades that we have discussed in the free videos, and I let you know what's the best strategy to exit those. So we're not going to leave you hanging. Questions, comments, concerns, if you want to hear more about Zach's Live Trader, livetrader@zax.com. Shoot me a quick email and I'll tell you more about it and where you can go ahead and get signed up. So this week we're going to have Dish Network here. And then in a half hour, we're going to do Mylan, the makers of that EpiPen that everybody had so much fun talking about. Then tomorrow, we're going to do my favorite, probably my favorite stock to do, and that's NVIDIA. And then our premium stream is going to be on Disney, so we got a lot of stuff going on here. But Live Trader subscribers, don't forget, your boy's going to be in Sunny Isles Beach, Florida later on in the week working remote, but that doesn't mean we're not going to get you that video. We're going to make sure we get you that video review on Thursday, even if I have to do it from the beach. I'm going to get it done. So you're definitely going to see that. Maybe we'll Skype in here. We're not really 100% sure how we're going to do it, but regardless, it's going to get done. You guys are going to get the review video where we'll touch on all these and talk about some of the trades we've done previously, okay? So we're not going to leave you hanging. I'm always here for you, all right? And as always, send me those email requests for what you're looking at next week, what you want us to talk about, because we're open to suggestion here at Zach's Live Trader, okay? Now, let's go ahead and dig into Dish Network here on the price consensus and EPS surprise chart on Zax.com, okay? So, sorry, let me go ahead and get this framed up here. As always, the black line represents the price, which corresponds to the right y-axis. You have a multicolored or different colored arrows here. The green ones are earnings beats. The red ones are earnings misses, okay? And then you can judge by the tail how big these beats or misses are, right? So the bigger tail, the bigger the beat, percentage-wise, right? Same thing on the red side, right? We got the little hashtags, the hashes, dash marks. Longer that is, the bigger it is, right? So then you have the multicolored lines here. These represent the evolution of our Zach's consensus estimate over time. And this is where we really start to tell the narrative here of Dish Network. So very optimistic in 2012, 2013, right? Where they would start and say, oh yeah, we're gonna make a ton of money. And then throughout the course of the year, we're like, nah, we lied, right? You didn't really get much growth year over year. In fact, this looks like contraction, but the stock didn't care, right? It just kept on rallying up. And then here's where things get interesting. When you look into 2015 and think about the themes in the general marketplace here. Now, Dish Network does satellite TV service, right? So think of DirecTV, that kind of thing. They're a competitor to them. But the thing about Dish Network is they were always like the low cost, the cheaper provider there, okay? So that's kind of where they wanted to slide in here. Like, we're cheap, we can go ahead and get you the Dish, and it's gonna be a lot cheaper than the expensive guys at DirecTV. And then of course, you know, you have the whole battle of cable versus satellite. Anyway, I never understood it. You get satellite, it rains, your satellite goes out, you can't watch TV. Isn't that when you wanna be watching TV anyway? I don't know. But the thing is, now you have this whole sort of cord cutting that's taking place across the entire market, right? Where these packages are unbundling quickly, and you have providers that are standalone that you can just go ahead and sign up for. So the PlayStation Vue network, or more, you also have Sling TV. Now, the good news about Dish is they own Sling TV. So you get this interesting mix here of, yeah, maybe we're cutting the cord, so to speak, but if they own Sling, then are the customers just kind of going that way? And honestly, your cost per acquisition on the Sling side is going to be much cheaper than on the Dish side, because you don't have to set up service calls and send people out and have the hardware and do all that whole thing. It's just like, oh yeah, click on the mouse and click, boom, Sling, right? So a little bit different. Anyway, back to the price consensus and EPS surprise chart here, and we can see what happened throughout 2015, where Dish is beating. I mean, these are big surprises. 104% surprise, 85% surprise, 52% surprise. These are all a bunch of surprises. And then, but in the middle here, what's going on with EPS, right? It looked like we started to turn the corner, and then it's just, I don't know, it's just chopping around, and no one's really sure. So I think out of this indecision is really where you saw a lot of the sell-off, with shares coming from $79 all the way down to lows in the 40s. But since then, you've had a little bit of a rebound here. These EPS numbers have kind of stood in, and then you have a little bit of volume here. You can see that interest in the stock overall, people have been starting to pay attention a little bit. Okay, so that's something to note as you're putting together a strategy here for shares of Dish Network, is that they do have this sort of diversified business that they're trying to do outside of the realm of the regular, satellite TV. So that's a good part. But then the bad part is, what's the real barrier to entry for Sling TV? What's to stop any other company from going out there and packaging something that's cheap, that's easy to use, that people sign up for? Therein lies the rub. Is that Sling TV brand enough to make it happen? I don't know. Like we said, Sony just came out with their PlayStation. I think they call it the PlayStation View Network or something like that. I don't know. We'd have to ask Panderson about that one. But it's like $30 a month. You can get ESPN and stuff like that. So there's a lot of changes happening in the kind of media world and how we ingest this sort of traditional TV. And with Sling TV, Dish Network is trying to not be left by the wayside. But what I've heard a lot of is Dish is a potential takeover target moving forward for one of the bigger media companies. And we've certainly seen a ton of deals get done in this space. So it could be right around the corner. You never know. Now, I don't ever want to buy something just as a speculation on a takeover. So keep that in mind too. All right. So now let's look at the detailed estimates page here on Zacks, see what other people have to say, what the other analysts think about Dish. So it is a Zacks rank number 4 sell right now, okay? Momentum style score of A, growth C, value D. They're going to report before the market opens on Wednesday, I believe, the 9th. Wednesday is the 9th, yep. That's right, because I will be in the air when they report. I know I keep rubbing it in, sorry guys. But now let's just go here. Why is this a 4? We've only got one analyst that has come out and said anything either way on Dish. So this is why it's a 4. This is because there's one person that's out there who was a little bit negative on it, and that's all we do. We just take what the estimates are, what analysts have been doing, and interpolate that data. We don't go out here on a limb and make our own judgments on the stock. We take a look at what others have already done. So one person dropping their numbers, but really didn't do anything to the current quarter Zacks consensus estimate. And even had, the next quarter's number actually increased. If you look at current year, off a penny, next year down 3 pennies, but that's not much of a move. If you're talking from 311 to 310, I mean, come on, it's a sneeze. This is what I want to look at here, and I was talking about it with these surprises that they've surprised, several quarters in a row, and these are pretty big beats. Quarter ending in December, that was a 50-cent beat. Last quarter was a 14-cent beat. And I want to flip right back here real quick. We're talking about these beats and what the stock price did. The stock is still kind of rallied here, even as these stocks are, they're beating, but it's not fantastic. So what are we going to look for in Dish's report? Subscribers, obviously. In this case, they haven't really talked a lot about the Sling TV subscribers, how many they have. There was a Wall Street Journal report back in February saying 600,000. I know the company was targeting 800,000 for this quarter. That's kind of what they want to see. So I suspect if it ends up being a good number, they're going to want to talk about it. And if it's not a good number, then they'll just kind of brush over it, right? So that's kind of ace in the hole, I believe, that they have over at Dish Network coming into this earnings report, okay? Now, as always, what I'm going to do here, we're going to dig into this options chain on Yahoo Finance, we're going to take a look at what would be a good bullish trade and what would be a good bearish trade, and then I'm going to give my humble opinion as to which one I believe is going to pay off here in this case. Now, you're not going to know what happens unless you are a member of our Zach's Live Trader service, so that you can see my follow-up video, so you can know what to do if you were to put a trade like this on. What are you supposed to do? How do you get out of it? And again, I offer that only to our premium members, and it's only $9.99 a month. You get a free 14-day trial. Shoot me an email, livetrader@zax.com. I want to make sure I get you on that and have you on our distribution list here, so that you have these links to these videos before they happen, so you're on top of things and you know what's going to happen when it's going to happen. Okay, so let's go ahead and dig in on Yahoo Finance, ladies and gentlemen. So here's Dish Network, right? The easiest way to do this, you just enter, right when you're at Yahoo Finance, you look up the quote, and then you've got all these tabs, and then you just click over on options. And what that'll do is that'll go ahead and pull up the options chain. Now, what I do initially is I love the straddle view, because I get calls on one side, puts on the right, and that helps with this little calculation that I do. So I always want to look at the at-the-money call and the at-the-money put and see what they've traded at recently. And this gives me an idea of the implied volatility of the move on earnings, okay? So in this case, it's a $56 stock. So we take a look at the $56 strike. Now, let's go ahead. The call was $2. Add that to the price of the put, which was $1.65. So now you got $3.65 as sort of your implied volatility or your implied move on earnings on the stock. Now divide that by $56 so that we can get the percentage move, right? So that's a 6.5% move that the market is pricing in here on Dish Network, which, some of our larger cap stocks that we've seen here have been as little as like a 4% implied move. And then some of the small caps that we've messed around with, I've seen 12, 13, 14% implied volatility here. So 6.5 is kind of, middle of the road-ish, right? It's nothing jumping off of the page at me. And again, $3 and sort of 60 cents. So what I usually do here, 360, let's just call it 350, okay? Just so you can make your math easier here. And then you look at if the stock's trading at 56, and you give yourself kind of a range to either side of this. So 59.50 would be the top end of the range that we're looking at with this, and 52.50 would be the bottom end of the range, okay? So we kind of get in the middle here, and you look, the 52s all the way up. Let me scroll this down. We'll fix this. See if I can get this all on one page for us so it looks nice. And we kind of do. Okay. So, again, there's no 52.50s, and there's no 50. Oh, there's a 59.50, surprisingly, but nothing's traded there. So you're generally in this range from the 60 to the 52, okay? Now, here's another thing, too, when I'm looking at these options contracts, is I want to make sure that there's a certain amount of liquidity. I want to make sure there's a certain amount of people that have skin in the game here. So a real important number to look at is going to be this column right next to the strike price, or over here on the other end. That tells you the open interest. So that's pretty much the amount of outstanding contracts that there are, right? And then you take a look at the volume next to that, too, which shows you how many have gone through today. Now, if you notice, looking at this November 11th contract, there's not a lot going on this contract, right? There's not too much activity. So, I mean, I basically skip it. I just go, you know what? There's not a lot of action here. I don't want to do this, right? And I cheated ahead of time, and I looked out to, the November 18th contract. And again, that one didn't have as much liquidity as I'd like. So I went a little further on this, and for a couple of reasons. One, if we go out to December, we're going to get a lot more liquidity. And the other reason is, as I was looking at this, my bias, nothing was jumping out at me, right? This was much more kind of speculative play, and I wanted to give sort of time for this thing to unwind to get some post-earnings drift, because even though I am going to give you a bullish trade or a bearish trade, I'm going to be honest with you on this. I'm not 100% super bullish or super bearish, but I'll tell you which way I'm leaning here in a little bit. But anyway, in any event, So let's look at the December contract. And if you look here, this is where you're really going to see a lot more liquidity. 10,000 contracts at the 47.50, 10,000 at the $60 call. You know, pretty much all of these have thousands of contracts or hundreds and hundreds of contracts. So it's much more comfortable trying to set up a trade here, knowing there'd be some people, there'd be more kind of skin in the game. All right. Now, the other thing I'm going to do is I'm going to take this off of the straddle view just to show you kind of the inner workings of this market. I want to be able to show the bid and the ask on each of these. Just because this one is a little less liquid than the other options that we've looked at in the past. And certainly if you stick around with me for the Mylan show, you'll see the numbers are a lot bigger there. Okay. Anyway, let's just start off with the bullish side of things, right? Okay. So if I'm going out to December, right, I'm buying a lot more time. So if I'm looking at this $55 call, you'll notice it's trading between 340 and 370. So basically what you can do is you can take a look at that, figure what the middle of that spread is. That's at 355, right? And that's probably where you get hit. If you go ahead and try to buy this, you should be able to get filled around 355, right? Now, if you look at that with the stock trading at $56, that means there's only $1 of intrinsic value. And the rest of it is all implied volatility and time value, right? So if I'm buying time here, I know that's going to work against me. So if I want to have a directional bias, what I love to do is I love to put this into a call spread. So where I'll buy a call at the money or a little bit in the money here on the 55, I will sell one further out of the money so I can earn back some of that time value that I bought on the long side of things, okay? Now remember, we were implying a move basically up to 60 essentially, right? 59.50 was sort of the top end of the range. So I do want to look at the 60s to see where we're at here. All right. So what would a trade like this look like? Let me erase just this part with the 355. Okay. And we'll look at this. So again, the middle of this spread, 355. So that's how much money I would have to pay for the 55 call. And then if you look at the 60s, they're trading 145 by 160, right? So let's just say, just for simplicity's sake, you could get filled at 150 real easy, right? Let's just call it 150. So you could sell that for 150. So that means you would have $2.05 at risk on a trade like this, and your total upside would be $2.95. The $5 is the difference in the strike prices minus the 205 gets you $2.95. So you could potentially make $2.95 on 205 or 143% on a trade like this. Now, how do you lose on this trade? If shares of Dish Network are below $55 at expiration on December 16th, this is going to be worthless, okay? Every penny above $55, up until $60, you get sort of dollar for dollar. Anything above 60, you max out your return with that $2.95 on your 205. Break even on this trade would be 57.05. So you would need to see shares of Dish Network above 57.05 at expiration December 16th. Okay, fair enough? So that's a long call spread, a long 55-60 call spread, or a bullish call spread, however you want to call it, for a net debit of 205. All right, so that's a bullish way to look at things. Now let's look at a bearish way to look at things. And again, taking into account these numbers that we talked about. So the bottom end at 52.50. So just like I put on a call spread to basically bet that this stock's going to go up, I could put on a put spread to bet it's going to go down. So if I look at the 57.50 put and the 52.50 put, what does this look like? Again, let's hit the middle end of this range. So this is trading 350 by 390. So 370 would probably be a decent fill there. I'd be long there, but I'd be short this 52.50 put, right? So that way I get back a little of this time value. So subtract, in this case it's 170 by 2, so 185 is the middle of that. So that ends up being exactly 185 here. And then now the potential upside, you take that 185, subtract it from the $5, which is the difference in the strikes, and that's 315. So this one has a big time payoff. If it works, you could potentially make 170% on your money. Now, what would have to happen for that to take place? You would have to see shares of Dish Network close below 52.50 at expiration on December 16th in order to make all that money. You're going to lose it all if Dish Network is above 57.50, okay? So that's kind of the range that you're betting on there, right? And you're not going to lose any more if it keeps running away. If it goes to 110, you're still only going to lose that $1.85. So you have a clear-cut definition of what your risk is on this trade. You also have a clear-cut definition of what your potential upside could be. So you got both sides working for you on this one. Now, in the case of Dish Network, which options trade would I do? Would I be bullish or would I be bearish here? Cautiously bullish, and I'm a little bit bullish on this, and the reasons being, when I looked at that price consensus and EPS surprise chart, we had a consistent trend here on Dish Network to the upside. Plus, we're not quite sure what these Sling numbers are going to look like. So I do believe that there's potential for them to come out and say, hey, there's been a ton of people adopting Sling TV. It's starting to go good. Because I think this is one of those things that's going to go small, and then all of a sudden we're going to have a couple huge quarters of people cutting the cord and changing over and doing that, right? So there's that. But, you know, and of course they're a potential takeover target, right? So that's kind of my 3-point thesis here. And again, I don't want to lead with them being a target. I don't think that's ever a reason to buy a stock. But it could be the third reason to buy a stock, right? Never the sole reason, but it can't hurt sort of thing, right? I guess that's how I'm thinking about it. And, you know, just seeing those numbers, the EPS numbers are actually pretty solid. That's a lot of money that they think they're going to make. So they can go through some growing pains here. That's fine. The transition over to Sling from Dish, or who knows, maybe they're gaining on both ends. They got a new skinny bundle pack that they have on Dish Network that might be working out for them. So there's a lot of decent things we're looking at. So anyway, so that's what I'm talking about here. I think I can be optimistic, a little bit bullish on this. So that's kind of the trade I'd be looking at here. All right, so don't go away. In about 7 minutes, I'm going to be right back here, and instead of talking Dish Network, we're going to be talking about Mylan. So make sure you chime in the comments section below. Let me know all about the video, what you liked about it, what you hated about it. And as always, livetrader@zacks.com. Make sure you hit me up so you know how this goes, so I can review this trade for you later on in the week, later on in the month, and we can see, you know, how I'm doing with it. So I will see you in a little less than 7 minutes. Have a good one.
Clowns to the left of me, jokers to the right. Here I am, stuck in the middle.